The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's time once again for the old Option Block, the show where we cover all aspects, all nooks and crannies of the options market. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And I am joined today on the old all-star panel, first up by a returning regular who hasn't been on in a little while, mostly because we've had holidays whenever he's wanted to be on the show. Good old Uncle Mike Tosaw from the St. Charles office of Know Your Options, Inc. Uncle Mike, welcome back to the show, sir.
Always happy to be here with my friends from the Options Insider Radio Network.
We're always happy to have you, Uncle Mike. It's a mutual admiration society today here on the old all-star panel. And speaking of admiration, we don't really have much for him, but he's here anyway. He is the Rock Lobster, beaming in all the way from Maine, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Lobster, how go things in the fair state of Maine, sir?
They're going well, but you kind of hurt me right there a little bit.
A little zinger, a little jab just to wake you up to make sure.
Just for that, I gave you a chair squeak.
Oh, no.
The dreaded chair squeak.
Let me just clarify, that is not a dreaded thing to me, but to the listeners who are now clenching their teeth and saying, oh, dear God. But no. Yes, we do have
Stop.
We do have a bit of a truncated panel today. The boys at OX are busy. Perhaps, let's just say they're on assignment, as we were wont to say here on the show, so they couldn't make it today. So we do have a nice, truncated, tight-knit crew here on the old all-star panel. And with the team assembled and admiration all around, how about that, Andrew? We're going to dive right into...
I feel a little better now.
I'm glad I could validate you, sir. That's what we do here on the show. We validate all of our friends. All right. With the team assembled and indeed validated, we shall dive right into the trading block.
The trading block.
All right, and welcome to the Trading Block. This is, of course, where we talk about what's moving the old markets, what's lighting up the tape today, what activity is going on the street. But I think before we even dive into all of that stuff going on the street today, there's a little elephant in the room we probably should address. First, on our previous show on Monday, as we were recording it, there was a lot of big news breaking here in the old Chicago derivatives community. In fact, about 5 minutes after I got off the show on Monday, my inbox was lighting up and my IMs and with just news that did you see what's going on over at PFG Best? Of course, if you haven't been paying attention to this story, PFG Best was, I suppose, a relatively a modest-sized Chicago-based. Actually, they moved out to Iowa, but formerly Chicago-based futures firm. It did some options stuff. They had a growing options presence over there. I know the guys who ran the PFG options room. And they were making a good foray into the options world and trying to make a run at becoming a serious options broker as well. And anyone who's been active at all over the past few years in the Chicago trading scene, particularly on the futures side of the fence. If you've been to any of the futures events, I go to FIA events all the time, the Futures Industry Association, particularly the show down in Boca. Russ Wasendorf Sr., the guy who ran PFG Best, was a fixture at those shows. And I would talk to him all the time at those shows. I didn't know him very well, but I knew him well enough to chat with him every now and then whenever we met up at these different FIA events. I had dinner with him a few times. And a very outgoing, very gregarious guy. He would always run a lot of the he was a big fixture at the Boca show for FIA. He was the one who was responsible for getting all of these crazy big guests for these luncheons he would throw that he would pay for the guests. He brought in Barbara Bush one year, Tommy Franks, Alan Greenspan. These are the type of speakers who don't get out of bed for less than six figures. So this was a expensive luncheon that he would throw every year, bringing in these guests who were, I guess you can call them only at the best tangentially related to futures, except for Greenspan. Tommy Franks and Barbara Bush, they were interesting, but not exactly futures related. I think Barbara Bush was even kind of confused why she was speaking to a futures group. But that's what made this kind of news coming out of PFG doubly surprising, is that he's been very much a mouthpiece and a fixture for the futures industry for a long time. He's spoken out on a number of recent issues like the CME, CBOT acquisitions and all these other things. He was speaking out at MF Global last year. He was very much front and center for the futures world. So to hear that not only was his firm that he committed suicide and essentially admitted apparently in his letter to committing fraud, but now there's $200 million plus worth of customer assets missing that he apparently defrauded is just mind-numbing, I think, to a lot of people here in Chicago. And it's amazing. If you went back and just dialed the calendar back 1 year and you talk to anybody here in Chicago in the trading community, particularly in the future side of it, and you said, hey, 1 year from today, MF Global and PFG Best will both be wiped out. Russell Sr. will have tried to commit suicide. There will be over $1 billion in customer funds unaccounted for. I think everyone would have thought you were crazy. It's just that type of insanity, and particularly post MF Global to have this happen. I mean, it just really makes you wonder what the heck is going on the future side of the business in particular with these regulators. And this is a business that supposedly is attempting to be at least industry regulated. You have NFA, the National Futures Association, supposedly running the ship for these firms and keeping a track of them. And yet we have a situation where PFG has been in arrears on these accounts, and NFA has essentially been aware of it for the better part of 2 years. And they apparently questioned at one point why one of the accounts that they were monitoring that's supposed to have about $200 million in it had about $5 or $10 million in it. And a day or two later, they apparently received a forged fax, or what appears to be a forged fax. That's what Dow Jones, at least, is reporting, apparently from a number that Wasendorf owned himself, stating that, oh, yeah, the count was fine. And apparently that was enough to put off the dogs for several years. And, in fact, back in as recently as January, post-MF Global meltdown, the NFA did a spot check of all of the futures brokerage firms under its purview, and they found that all of the, I think, 70-odd firms, all the customer funds were accounted for, and everything was as it should be. So as recently as January, they had signed off on this firm and their handling of their customer funds. So I think to a lot of people, it really is just completely dumbstruck we are just completely dumbstruck as to how this could possibly slip through the cracks, particularly post MF Global, and just as signing off as recently as January on this, and just what level of fraud was going on over there to the point where he attempted to kill himself. I mean, it's just it's kind of just mind-numbing, the whole thing. I'm not sure either of you guys familiar at all with PFG Best or what's been going on in this situation of late.
Well, they're my publisher for my book.
Did they? Oh, yeah, that's right. I'm sure you. A lot of our listeners may know. Russ also owned SFO magazine, which I'm sure a lot of our listeners are familiar with, and I've done stuff with in the past. Mike, I know you have in the past. Andrew, maybe you have as well. It's been mostly a futures publication. They've done a lot of options things over recent years. A well-known industry type publication as well. That, of course, now shuttered and closed as well in the wake of this. So they published your book as well, Mike. I didn't know that.
Yeah, their partner firm W&A Publishing, Wasendorf and Associates Publishing, and they never wrote me a letter saying that they were going to commit fraud with everything.
It might be worth inquiring now as to what the rights are with those books, and if they revert to you now that firm is insolvent. Maybe you can self-publish that book yourself now and go on the Tosaw Grand book tour you've always dreamed of.
There you go.
Put it out, give it a little bit of an updated forward. I'll be happy to do it for you, Mike, and then you can go on the big grand tour and just bask in the love and adoration of your many fans.
There you go. And it's funny. One of the things that they requested because they give you whenever you write a book, you get like 10 or 15 free books or something like that they send you. But they, like, a tradition at W&A Publishing is that you autograph a book and send it to Russ Wasendorf. So somewhere in those pits, my book is sitting there with him.
That's how crazy it is, and that's how integral, and integrated and kind of incestuous this business is, where everybody knows everybody, works with everybody, and that's kind of maybe why firms like this are able to slip through the cracks. I don't think anyone would have expected a guy who's as much of a fixture in the business as Russ is, and has his hands in everything, publishing, the futures brokerage side, magazines, online, you name it. I've eaten at some of his restaurants with him in town when he was still here in Chicago and owned a number of different restaurants. So he's been active. I think he used to fund films back in the day. He's done a lot of different. He did a lot of interesting things. Perhaps a lot of that now we're discovering perhaps funded with customer money. So it definitely puts a different spin on it. You're looking back on it in retrospect. But yeah, I think a lot of people, he sat on one of the NFA committees that oversaw this kind of thing. So I think a lot of people really probably just overlooked. They probably thought it was an error from the bank, that there's no way it could be $200 million in arrears. Let's just overlook that, And it's something that was just so out of left field and so crazy that we had to at least address it. We couldn't operate in a vacuum here on the show, even though we're not really an industry show and not really a future show. It's just one of these things that is so crazy and so out of left field. And I think a lot of people here on the show and our listeners, I'm sure, interacted with PFG in many ways and shapes and forms. I know a lot of people over there now who are now out of work and are just as dumbstruck as everybody else as to what the heck is actually going on over there. Just crazy stuff. Andrew, have you been following this at all, or is this completely out of left field for you, being the man from Maine?
I've been following it, but I just don't understand how they don't catch these guys. You've got a custodial. The custodial has X dollars in the account. Why don't they talk to somebody running the custodial account? It's what the heck are the regulators doing? It blows my mind.
A fair and valid question, sure. So I've been talking to some guys over here. We've been looking at expanding maybe some office space here and talking to some guys in town about office space, and they've been telling me about how much NFA is just increasing and growing at amazing rates and tripling their headcount and everything like that. Apparently, they're doing it a little bit too little too late, because they should have had those people in place apparently earlier to catch this. Between MF Global now and now this, it's just, what faith is there left in any sort of industry-led supervision or regulation here? There's no way. How can Congress not just tear this apart? It's a cause celeb now. Any sort of congressman who wants any sort of just a grassroots type of issue to jump on, and red meat issue, attacking those obviously corrupt derivatives firms is going to be an easy one to do that.
What I understand is the OCC has found a way to run this business. And they learned the hard way in the early 70s, I'm sure, when people used to use like an electric guitar for margin. Do you have any collateral? I got a guitar, So they learned a long, long time ago. There's the layer of the OCC, there's the clearing firms, then there's, and then there's the risk control in every basically prop trading shop or whoever the end user is. So I don't understand why they just don't adopt the model that works for all of this counterparty stuff and just get it over with, because it works. You need to have the third party there that every day they look at the numbers in the bottom of the, and they say, okay, there's enough money in this account or there's not, and there's somebody responsible for it. And they still, somehow the Futures Association has been able to wiggle out of this. The options groups cannot, because you need to have the cash in the account at the end of the day. There's no way. I just don't understand how the futures guys can wiggle out of this twice now.
It is amazing now to see, to see them, people talking about wiggling out. You hear Gensler, chairman of the CFTC, passing the buck. Oh, we don't regulate them. We regulate the exchanges, and the exchanges regulate. This is all industry-led, like NFA, so he's kind of passing the buck to them, and I don't know who NFA could pass the buck to. I think it kind of rests with them now. But just, it's just crazy that this could happen twice within the span of a year. And the worst thing is both times impacting customer accounts. That should really be...
Don't you think it's time for Gensler going? I mean, what use is he providing right now?
I don't know. He recused himself from MF Global, which is essentially the biggest disaster to occur in the business on his watch, because he was buddies and we used to work with Corzine, so he was no use to that. Now he's passing the buck on this and saying, well, this isn't my fault. This is NFA's fault, and he may have some credibility there, but still, yeah. If he's not going to act on these two major scandals, what's the point? What's the point of the CFTC at that point? It's just. And I have to imagine a lot of retail customers out there are scratching their heads and saying exactly what you're saying right now, Andrew. What the hell is going on out there in Chicago with these crazy firms and the NFA, and why can't they get this stuff straight on the futures side? It's just, I mean, not only are they losing, but they're losing customer money in the process. That's just, or in this case, perhaps stealing it, which is just the
futures
fact.
Futures aren't complicated either. Your long one, your short one. It's a future. I mean, you got the dough. There's 10% margin. I mean, there's not a whole lot of moving parts to the future.
Yeah, it's essentially a one-price product, unlike options with multiple series and strikes and classes. So, yeah, if they can figure it out on the option side, and so far at least been relatively, scandal-free. I say that now. Who knows? Maybe next week something crazy will break in the wake of this. But for now, at least, it's scandal-free. But still, just absolutely amazing and horrifying stuff all at the same time. That customers yet again coming up short. Yeah, I kind of wish the OX guys are on today. I could ask them kind of what kind of things they're hearing from their customers on this, because I'm sure a lot of the retail future customers are up in arms about this and saying, what the heck is going on? How could two firms go under and in the process of doing that take so much customer money with them? But enough.
No, I got a question.
Okay,
just to kind of add to that, at Options Express, if you have a $20,000 trading account, and let's say you do futures, it's something that you can do futures and equities and equity options. So it's kind of 2-in-1. So with that $20,000 account, you have SIPC protection. So in other words, for our listeners out there, it's kind of like FDIC insurance, in that if Options Express were to go belly up with your $20,000 account, then you're protected through SIPC. If you just have futures only, like what PFG did, does such a protection exist at all, or?
I know they've been adding options of late. I mean, they're making a bigger push into options. I mean, they approached us a while back actually about doing an options show on our network. Good thing that didn't go through. But yeah, so I mean, they are pushing more into options. I don't know the degree to which that SIPC would apply if they had the same thing that an OX has, where you could kind of trade them both from one account, or if they had separate accounts. I don't know really. I didn't get a chance to get that deep into their options functionality to see exactly how they offered it. But yeah, if they had something similar to OX, then I would imagine yes, hopefully yes. Who knows? Maybe this money isn't gone. Maybe it's just misplaced, and maybe he put it somewhere else. But I'm guessing, given the amount they spent on many things over the years over there, that money is probably long gone, unfortunately. So yeah, hopefully maybe there will be some protection for these customers, and maybe we'll see the industry stepping up to try to make them whole if that is not the case, because you can't have customers losing their money like this twice in a row. That's just not viable for a business long term. Not or short term or in any way, shape, or form. It's just not viable whatsoever. It's just completely ridiculous. But enough of us ranting on the horrible stuff going on in the future scene out here in Chicago. Let's instead dive back into our purview, which is, of course, the options market. And it was an interesting day on the street today. Most of the major indices closing down about 0.5% or so. The Dow a little bit less. S&P closed at about 1335. The Dow closed about 12,573. The good old NASDAQ down about nearly 1% to 2866, and the VIX cash ticking up about 2% to 18.32. Interesting stuff going on in the VIX today. We're going to get to it in the odd block in a minute. There was a crazy option spread in there. But maybe before we get into that, Andrew, anything caught your eye today in the trading out there in VIX land, either options or futures related?
Yeah, what's funny is it's such a bizarre volatility market. We seem to close right around 18 every day, but intraday the market we spiked to 19. We have a little move down. Nobody knows quite what it's real weird. That's all I wish there was more. I had something more definitive than weird, but
That's one of your many technical terms. Do stuff. It's weird.
Yeah, I'm looking for. I think the VIX should settle because. One, we don't have enough underlying volatility to support it yet. It's still there, and then normally the volatility markets are pretty good. Like if VIX is trading 1830, there's usually a reason. So I'm just trying to figure out what that reason is. Like corporate earnings going to be bad. I mean, it keeps wanting to dip into the 17s. It actually traded there today a little bit in the 17s. It closed there the day before, and the market sold off. I'm still trying to figure out what the reason today was. Must have been Europe. The euro trading one, setting a 2-year low or something, which it should. Why should the euro be bid? I mean, the euro going down should make sense because nobody knows what's going on with it. Why should it be? Why shouldn't it be 115?
Yeah, exactly. If you're bidding up euros right now, what the heck?
And that's the problem. Since there's no good news, everybody just says sold.
Yeah, it seemed like it was going to be one of those days where we started off kind of mildly down, 0.25%, 0.5% across the board. Then it seemed like towards the end of the day it was going to pull that magic eraser out of its pocket that it has been of late and kind of erase most of that downside movement and
Yeah, and
close.
actually the SPY was up on the day, I believe.
Yeah, for a little while it was. And then then towards the end of the day we kind of closed back down again. So it seemed like the magic eraser didn't have the oomph today to erase most of the downside.
There was no technology help.
Yeah. There
wasn't
tech love at all.
Technology stock around that was up. But what's amazing is how fast they pulled the plug on the volatility. It's like you look at it in a day, it's trading kind of firm, and then it goes down the drain. And that's I look at that. What tells me is there really isn't a real solid bid for it. It's up there because nobody wants to sell it cheap, but there's not really a solid bid for it. And that's the only thing I think of that. Eventually we're going to trade a little higher next week, mostly because when the market's down a little bit, vol really isn't exploding. It's moving up like it should, basically, cruising down the curve. But, I mean, the instant the markets start to turn around, they crush the volatility right back down to where it started. I mean, it's just like, I think it's the greatest day trading. We're back in like day trading zone with the VIX again.
Well, it's good. We got some paper and some liquidity and some vol somewhere. So if we get vol of VIX, we'll take it.
and that literally is it, though. I mean, it's such a weird, it's such a strange market. And I just think it's a very illiquid market. I don't think there's any public in the market. Very small. The OX boys could say something, except for maybe trading Apple when it goes up or Priceline or something like that. But it's just a very illiquid market right now, and I just think illiquid markets are illiquid markets, and that's what we're looking at.
So speaking of Apple, Uncle Mike, that is your baby. That is your reason you get up in the morning these days. And it's been moving around quite a bit, up about 50 odd handles, actually almost 60, given where it closed a couple days ago, in recent weeks, and now kind of closing off about 1% today. So what have you been up to of late in the land of Apple?
Well, I ended up getting out of the back spread. I had like a 2-point loss on the month for the back spread, which is fine because it was for the purpose of a hedge. If we're going to go from 575 up to 600, I'll gladly take a 2-point loss on a hedge. Rolled back into a collar for the time being. We're at 640 and 575 right now, so I'm kind of in different months, but that's just kind of a for now collar. Next week before the earnings announcement, bet you dollars to donuts there will be more adjustments.
Are you as surprised as I was? I know we've talked a million times on this show in the past about Apple has that pre-earnings run-up. It's almost like clockwork. And yet usually it starts around this time, a week or two before earnings. It seemed to start, I guess, beginning of July almost. They didn't even wait. The earnings was about almost a month away, and they said, let's just start kicking it off now. And things up about 50-odd handles over the past few weeks. It seems like a very early pre-earnings run-up, at least to me. Maybe I'm out of step with the Apple faithful these days. I don't know.
Well, I mean, it's maybe since earnings is coming up in the 24th, that was the pre-earnings run-up. Now it's pulled back. Now it's ready for the real.
Now it's ready for the 750. Look out, here we come rally.
There you go.
You'll be loving that back spread then.
Yeah.
Speaking of, we're always talking about chinks in the Apple armor, but I did finally get my new phone. It is an Android phone. I guess the hot new phone, the Samsung Galaxy S3. I had to pre-order this thing almost a month ago to get it. That's how crazy popular it is and how hard it is for them to get components for this thing. But I think they pre-ordered like 10 million units for this thing. This thing is selling like mad. And I've only had a day or so to play with it, but so far it seems like they're pretty. I know there was a while there. I've had an Android phone for a long time. There was a definite discrepancy between Android and iOS. iOS was smoother. iOS was a little better. The phone worked a lot better. Now with these new phones, with the Galaxy S3, it's the same camera. Yeah, that was another big selling point for Apple. They had the much better camera. Now it's as smooth. It's in many ways much better than an iPhone. Granted, we haven't seen the new one that's coming out towards the end of the year, but if there's people out there saying, oh, there's a big gulf still between Android and iOS, that gulf is gone. They've pretty much caught up. It's a very, very smooth, well-designed, and good UI device, which has always been the problem with Android. The UI has been very lacking, and the user experience just wasn't as polished, and they've really refined it to the point now where, in years past, I would never recommend an Android phone to, let's say, my mother. I would just say iOS, and I would certainly still probably recommend an iPhone to them, but I would not hesitate to say, hey, this phone is pretty good too, and certainly will be as easy for you to use. So that's certainly a milestone. Well, and it's interesting to see going forward what that does. Apple's got so many fish in so many different barrels that they could pull out at any given time and just pull out their next thing of magic, but interesting stuff. We'll see at the earnings call, maybe if they are going to come out with some of these smaller tablets everyone's rumoring about. A lot of good rumors going on. Anything else catch your eye aside from hedging Apple these days, Uncle Mike?
Well, real quick, before we move on with that, what would you say the main difference, what can an iPhone do that a Droid's not able to do, in your opinion? What's the benefit of getting an iPhone over a Droid?
The best things that the iPhones had over Android was the UI was much more polished and smooth. If you touched it and you dragged it and you did things, it was responsive. Android was not as responsive. That was a noticeable problem with them. Also, the camera was light years better. I had a Droid X with an 8-megapixel camera, and my old iPhone 3G, that was a 2-megapixel camera, took noticeably better photos, just because the processing they put into it and everything else is much better. They spend a lot of that, hundreds of billions of dollars, whatever they have in cash, a lot of that is devoted to R&D on the camera side. So there's a lot of things, and also the app and ecosystem and everything else was much more polished. Nowadays, I think Android's caught up. The navigation alone is a huge, just being able to tell your phone, and they've had that forever for free, tell your phone where you want to go, and you don't even need to know the address where you're going. You just tell, I want to go to, let's say, Joe's Crab Shack, and it'll take you there. That's fantastic. I've thrown away essentially my dedicated GPS in my car for the phone now. And the music player, that's caught up essentially in the Play Store, and now has added content where there wasn't much content on Android in the past. You couldn't go out and get the music and the movies as easily as you could on iOS. They've caught up on a lot of fronts. And I think iOS is still better on the apps and on the content side because they have better deals and because they have one piece of hardware that the developers can design for, as opposed to the myriad of handsets on the Android side you have to develop for all of them. But I think still at this point they are very much a par for the course type devices. And plus the screen alone. The screen is 4.8 inches on my new phone. It dwarfs anything. Looking at an iPhone now, it looks like it's a child's plaything. It's just that much more screen real estate alone is an enormous thing. And yet it's really thin so that you can throw it in your pocket and you don't really notice it. Granted, this is all from one day of use. Perhaps I will change my tune later. Perhaps I will find it to be too big and bulky to carry. But so far, from a day or so of use and carrying it around in my pocket, it has not been too big. I can see now why this phone is sold 10 million plus pre-orders, and it might even be outselling the iPhone at this point. It's just the thing is just lighting up the phone world. All right, and with this week in cell phones drawing to a close, we will close up the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the old Odd Block. This is, of course, the portion of the show where we break down some interesting and or unusual activity that was lighting up the old tape. And as I alluded to in the trading block, there was some interesting, unusual activity in the old VIX today, in VIX options in particular. And I suppose you can call this one a pretty sizable calendar strangle swap. It's not really a strangle. It's not really a calendar spread. It's a wee bit of both. So yeah, we have a new name for today, a calendar strangle swap. Does that work for you, Andrew and Uncle Mike?
Works for me.
And what we saw...
Works okay.
What was that?
Works okay.
That works okay, yeah. But yeah, what we saw today in the old VIX options was a massive four-legged trade. Paper came in and sold, it's like about 75 to 80,000 of the July 20 puts for about $1.70. This is against open interest of over 150,000 on that strike. So this was a closing leg of a trade. We also saw paper coming in selling about 75,000 of these weeklies in August, the AUG 25 calls. That also against some sizable open interest of about 110,000 on that strike. So again, we have downside puts in July, the July 20 puts, and the upside calls in August. That's why I call this a time strangle, essentially, because it's a strangle, but not all in the same month. So this was obviously probably looks like a long leg of a time strangle that they sold out to close today. Then they turned around and again, taking this kind of staggered calendar type approach, which is very interesting for this type of trade. They bought about 100,000 of the SEP 20 puts. They went up for about $1.80 today, and then turned around and rolled out to October with the other leg and bought about 106,000 of the OCT 26 calls. And the prices available on those. But essentially what we saw is this guy closing out a long diagonal / time strangle in July and August and rolling it out to SEP and OCT. And this is a very bizarre way to trade strangles out here. Obviously, this guy's looking to hedge some position in the underlying VIX futures. What exactly that position might be and why he would choose to deal with this much of term structure exposure, trading across 4 expiration months, opening up this strangle in SEP and OCT versus just SEP or just OCT. Obviously, there's some futures term structure issues at play here that he's looking to game. Andrew, have you had a chance to look at this one at all, or Uncle Mike? Did this one come up on your radar at all? It's a pretty sizable and a pretty bizarre type trade to go up in VIX.
Yeah, well, are they? I don't know if they're hedging. Are they really hedging futures with this? I think they're just keeping these straddles on. I think they're just hedging pretty large portfolios, right? They're blowing out of their 20 puts. They're blowing out of some call. I just think they want to own some VIX strength. I'm not quite sure. It's actually fairly confusing to figure out what they're trying to do.
You think? Actually, yeah, I think I said VIX futures. What I meant is more like they obviously looking to hedge some sort of VIX/vol exposure here with picking up a position that obviously is designed to protect against enormous moves in the VIX going forward. But yeah, why you would choose to structure it like that? There's got to be some sort of term structure component to it. Why that makes that beneficial to do the SEP versus the OCT. I had a lot of people, calling me up today looking for inquiries about this trade and what it was, and apparently some people were talking to the guys down on the floor of the CBOE for this trade, and they were saying this guy was looking to game the term structure a bit by putting this trade up the way he did. Off the top of my head, I don't see the exact reason why he would want to structure it in this kind of puzzling way. Uncle Mike, you ever out there trading time strangles like this?
Never done anything like that. No, that's a new one to me.
I mean, and there is some, and you're right, there is some risk by trading this like this. So it's definitely it's an interesting trade, buying the SEP puts in the OCT. I mean, I can see why he wants to buy the OCT calls because it's October, and you want to buy juice in October because it's October, right? All the bad things happen in October. But it's a different. It's okay. Let's just call it. It's a strange one. It's officially a strange.
I mean, if he was just looking to hedge exposure to the VIX, then he would put it all in 1 month, and probably October to get the most bang for his buck. He wouldn't set it up like this, where he necessitates now that he has to roll this thing when September comes around. It's an odd way to do it unless you had some very specific reasoning behind it. So that's why we like to pull up this old odd block every now and then and discuss some odd trades. And this certainly falls into that category of the odd type trades. But we'll keep an eye on this one. Maybe we'll have a chance to parse this one a little more, and maybe we'll get a little more detail for one of next week's shows on what exactly was going up, maybe what he has on in the underlying or somewhere else that he's trading against this one, because we're always looking at just one portion of the puzzle, seeing the options trade trading here in the open interest and seeing what else maybe may have gone on, what this guy's been trading in the past. Apparently, I think this guy does this on a relatively regular basis. So maybe we can go back and look at some of his older trades and see what this guy has been up to. But again, a very bizarre, sizable calendar/time strangle swap here in VIX options. And that is going to do it for the old odd block. And now, since the boys from OX could not make it today, we will jump right over the express block and dive right into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, where Uncle Mike comes on down from the super high mountains of St. Charles, Illinois. You know, if you've ever been to Illinois, that we are indeed famous for our mountains. And comes on down off the peaks of the St. Charles mountain ranges there and comes on into the studio to dispense some options wisdom. And Uncle Mike, my birdie network has been active again of late. And one of my birdies came in and told me today, and you can verify this for me, they told me that you might be thinking about discussing today the old ratio repair strategy. So tell me, should I give my birdies, should I give them their snack today? Did they earn a cracker or no?
I think you get the birdies doing the wrong thing. Your birdies are always right. I think you need to have your birdies day trade in the S&P. They're right that often.
I'm putting together the all bird trading team as we speak, so they should be ready to go once we get approval in a few months, regulatory approval.
There you go.
All right, Uncle Mike, take it away, please, sir, before I drag us into more silliness.
All right. Well, right now you may have a stock that's down in value. The S&P 500 went up a bunch, and now it's down a bunch. And let's say you're still bullish the stock that you're in. And this is a strategy we've talked about on the show many times before, but maybe in this market this is something to consider. Step one, you have to still be bullish on the stock. Not super bullish, but at least somewhat bullish. If that's not your sentiment, then this is not the right strategy for you. Also, if you're bearish on the stock, then this is a very ingenious thing to do with the stock. Don't stay in it if you're bearish on it. Now, I'm not talking about if maybe you're bearish for the next day or two, but you're bullish on it for the next 5 years and it's a longer term holding. I'm not talking about that. I'm talking more about a shorter term trading stock type of thing. So anyway, let's say that you bought XYZ stock at 55, and XYZ stock I always mention is my all-time favorite stock because it does exactly what you want it to do. XYZ stock goes from 55 down to 50, and at that point in time, you're down $5 on the trade. But you still think it can get back to 55 at least within the next couple weeks, or maybe the next couple months. One thing that you can look to do is something called a 1-by-2 ratio spread. Now let's say that you like the idea of buying on the way down because you're getting more bullish. If you like it at 55, you love it at 50, but you don't like the idea of actually putting more money on the line to do that. Well, if that's the case, then a ratio repair strategy may be something to consider. So let's say you own 100 shares of my beloved XYZ stock. You can sell 2 55 calls for, let's say, $1 each, and then buy 1 50 call for $2. So with that being said, the premium that you take in from the 2 55 calls offsets the cost of the premium that you pay for the 1 $50 call. Now, sometimes this is going to come out to be a little bit of a credit. Sometimes this is going to come out to be a little bit of a debit. It just depends on the stock with which you trade. I've done them for all 3 situations, with client money, with my own personal money, and typically my benchmark, or what I'm trying to do, is to get this to around even money or even a small debit. I don't like taking in too much of a credit because those are typically higher volatility stocks that usually I'm not in anyway. So with that in mind, what's going to happen is, let's say the stock goes up to 55 between now and expiration. And sometimes this can work for a 1-month time frame. Sometimes this you may have to go out 3 to 4 months. Either way, let's say the stock's back at 55 at expiration. Then all of a sudden, the stock's back to break even, and you're actually $5 ahead. How did you get $5 ahead, you may ask? Well, the money from that 50 call is now your profit. those 255 calls expire worthless, and it's just that easy. Now, let's say it's not just that easy, which 99% of the time is the case. You're going to have to deal with some frustrations with this trade. If the stock snaps back too quickly, you remember that frustration that you had when you sold a covered call and it goes in the money and you're thinking, oh man, why did I sell that covered call? I should have just held onto the stock and taken the profits that way. Well, plan on having that frustration with this strategy if the stock goes up too quickly. If the stock goes down, you don't get any premium out of it. And what I mean by that is had you just sold a covered call, you'd get some premium on the way down. With this strategy, you don't get nothing on the way down. So with that in mind, there's a lot more to it with learning how to manage the risk of it and how to trade it. And ultimately, at times, depending on how active you want to be, you have to do stuff. So on that note, check it out, folks. It might be for you.
Yeah, it's one of those great strategies, kind of damned if you do, damned if you don't, I'm sure from a client advisor perspective, because you put it on and then the stock rallies and then the client's happy until it breaks through that upper strike and all of a sudden they're saying, why didn't I just buy the stock? Why did you make me do this? And if it drops, they're not getting the premium. So it is a great strategy as long as you know what you're getting into. And you're right, some of the management aspects that go along with properly trading that. But yeah, if you do it right, it is, as this strategy says, a great way to repair a bad trade. Thank you for that, Uncle Mike. You may now return to the mountains from whence you came in scenic St. Charles, Illinois. All right. And now we're going to dive right into our listener mailbox.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and welcome to the listener mailbag. This segment, pretty self-explanatory. This is where you, the listener, get to take the reins. And this question comes in via Twitter from someone who goes by the handle Dougman. I like it, Dougman. And he writes, should I sell the Ford, a little bit of a Twitter abbreviation here, I'm just going to translate for our audience to squeeze all this into the 140 character limit, I'm sure. He writes, should I sell the Ford August 9 puts for around 30 cents and buy the Ford Sept 10 calls for about 15 cents? Do you like this risk reversal? Obviously, Dougman here has been listening to the show, knows we are fans of risk reversals here, particularly these bullish risk reversals like this one. We discussed Ford on the most recent show and how Ford is reaching some pretty impressively, or attractive levels, I should say, from both a volatility and also an underlying perspective, and is a good target for some of these bullish risk reversals because the downside is relatively limited and it's a great way to leg in some great prices on the underlying if that's what you're looking to do. So in this case, he's got the time risk reversal here where he's selling AUG 9s, buying Sept 10s. And like I said, I'll be the first to talk about this. I know, Uncle Mike, you like Ford as well, so you can chime in as well. But I've done something similar like this myself. I have been selling more of these AUG 9s, and I was considering doing this exact same trade, picking up the Sept 10 calls for about a similar level. I've been holding off on pulling that trigger. I think some of this comes back to what we talked about on the most recent show, or maybe it was the pre or post show afterwards when we were gabbing about Ford risk reversals and about whether there is that near term potential for upside to merit the upside call portion of the risk reversal. And that's probably why I've been holding off and just using the puts to leg into some interesting positions here on Ford. So I've legged into the first half of this spread myself, and I've been mulling doing the second half. I haven't pulled the trigger yet, so if that gives you any inclination, Doug, man, I like the trade overall. I don't think you can go wrong. You can also adjust it a little bit if you want to do one of your depends if you want to collect the credit or if you want to actually put it on for some longer term exposure to Ford. You can roll it out to the AUG 10 strike instead. You can still do that for a bit of a credit, which is crazy. But yeah, so then you can get a much longer term upside exposure to Ford and finance it with a very near term put. And then of course you can repeat that put sale over and over again as you're going into different expiration months and make that trade perhaps even more attractive as the months go by. Andrew, Uncle Mike, what do you guys think of this trade?
I like it. I mean, just so long as I always tell people, what's the plan if Ford goes up, down, or sideways? If it goes up, obviously you're a genius. If it stays
You're
sideways,
dancing.
Depending on how many contracts you made, you at least paid for your commissions. But if it goes down, what's the plan and how are you going to manage that put? Are you fine owning Ford at 9, or do you want to just get out of it at 9? But I like it.
Yeah, I mean, that's where the discussion obviously starts. You have to be comfortable I'm always talking to people about selling downside puts. That's where the discussion always starts. Are you comfortable with the underlying at that level? And if they say yes, then there's a lot of things you can do with that, And of course, I don't think being assigned at these levels here in Ford, there are many ways you could trade around that and still make that a decent trade, I think, going forward. Unless Ford were to indeed circle the drain, which I don't think anyone foresees happening anytime soon. Certainly not with all that TARP money that's been flowing around in the different auto companies of late. Andrew, what say you to the Ford risk reversal, sir?
Yeah, I think basically if you want to sell puts, you're in the business of selling puts. You can't get away from it. I think for the most part, if you're judicious when you actually sell them, I think that could work. Mostly you have to sell them when probably everybody in the world wants to buy them. That's when stocks tank. I've never been a fan of selling puts on rallies, but
no fear of that here. Ford hasn't rallied in quite a while.
I know it hasn't gone anywhere. So I mean, it's kind of like sort of dead stocks or that have value are better places to trade them for sure. So I can't disagree with this trade.
So are you a bigger fan of selling the Strangle then, as opposed to the risk reversal? Because you think Ford's kind of tapped out right here. It's going to vacillate for a while. Would you prefer to sell that Strangle?
I don't see there's much. I don't think there's really much in selling the Strangle. From dollar point of view, it's not. There's just not. I think probably the best thing for Ford right now is selling puts in it that are below the strike, because there's not a lot going on, and you kind of just watch them evaporate, and sometimes that's a fine trade. There just isn't. If there's not a lot going on, that's what you do. So, I think it's a good trade. I don't think you really have to worry about buying the call anytime soon. I wouldn't mind maybe, he could use a little bit of the put premium to buy a call if the market actually could rally. We certainly seem like we're having a hard time rallying anywhere. I only like buying calls if we have a rally, essentially, or the market looks like it's rallying, has a potential to rally. Right now it's pretty tough overall for a name like Ford to actually, trade 11 or $12 in a couple months. I think it's going to take some things to happen that we haven't seen happen in a while. So I think the put side is an okay start, and you just kind of wait for the call side.
There you go, Doug Mann. 3 thumbs up with some different degrees of hedging from the panel here today. All of us liking the trade, but perhaps saying hit the puts first and then bide your time on the calls. And yeah, wait for a nice little pop before you decide to go into them. Let Ford show you something. Don't chase it and decide you have to put that call on.
Exactly.
All right. Thank you for that, Doug Mann. If you want to join Doug Mann on the panel here today, then by all means hit us up on Twitter or Facebook, or post a question in our Options Insider forum at theoptionsinsider.com. Post a listener question for the show, or there's any number of ways to get in touch with us here on the show if you would like to participate. But now we're going to close up the old mailbag for this week and dive right into Around the Block.
Around the Block.
All right, welcome to Around the Block, and it's so nice to be able to say earnings again. We're back in earnings season. Alcoa kicked us off. We are now ready to have some fun times from an earnings perspective. It is indeed, you might even say, an earnings fiesta. And starting off, we got a big tech day coming up on the 19th next week, a week from today, actually. We have Google, Microsoft, Nokia, and AMD all reporting on the 19th, as well as, everyone knows, the other Apple, Chipotle, also reporting on the 19th. The exception that proves the rule there. Then, of course, the Apple itself, the Big Apple, the day Uncle Mike shall not sleep. July 24th, when Apple shall finish its run to 750 and have its earnings call, and then move about 70 handles in the after hours. Of course, Bank of America on the 18th as well, and Citi on the 16th. So some financials gapping in there as well. A lot of big names coming out over the next week or two. Just a lot of 17th, Goldman Sachs. So yeah, we start off with the financials, we get into the techs, and we kind of just let it run from there. And then Chipotle, everyone's favorite. So amongst those, obviously, Uncle Mike, I know what you're prepping for. Anything else catching your eye here?
Yeah, I'm looking at those birds of yours, and I'm going to clip their wings if you do to me what you did last quarter.
Are they I was actually thinking about doing that again, about sending you another little email saying, oh, what about those Apple earnings on the 17th?
Yeah. So, yeah, I'm watching you this time, Longo. None of that anymore.
Yes, my evil birds causing a lot of extra sleepless nights in the Tosaw household. But, yeah, so you'll be adjusting your back spread, I think, quite aggressively going into, the collar now. Actually, it's like you're positioned pretty well going into these earnings, unless we do have indeed that insane run up again. Then you'll be rolling calls all day long. Andrew, what are you watching aside from this bizarre activity going on out here in VIX and the fact that it can't really catch much of a bid when it should, and any chance they have to sell premium out there, they seem to be doing.
Yeah, it's a little weird that way. Again, more weird, but still, I mean, it's just like the VIX it's like a day trading product. It just literally, market starts to turn around a little bit, it starts to fade. For me, I mean, I'm trying to keep as little deltas as possible right now, just because, it almost seems like every day we start down a bunch and then we kind of almost finish back up. It's just a hard, keeping an overnight delta, unless, as Mr. Tosaw might say, or Kavanaugh, you got a very long time horizon. There are very tough trades right now, because the market it's not being really kind to just really to anything except for treasuries. That's it, and that really is the problem. As long as people still want to buy treasuries paying 1% and don't want to buy AT&T paying 3.5 or 4%, we've got the market fundamentally has got some problems with liquidity, and that's what we're missing right now.
Yes, some interesting issues developing. Interesting to see tomorrow what we get if we get another one of these kind of mild sell-off days because nothing can just catch a bid, or if we rally a bit going into the weekend, and what goes on with VIX. I imagine you catch any rally VIX. I mean, look at last week when they were just champing at the bit to sell it going into the weekend. If they have the same activity again this week, or if they think maybe it's finally starting to settle in a little bit there. Just interesting stuff out there in VIX land. Not only with this crazy options time strangle swap, but just the propensity for people out there to be unloading vol whenever they can out there. It's very interesting. Even though we've seen, like I said, some great day trading out there. I think if you keep keep some bullets in the old gun, it could be helpful. But people apparently not heeding that call and just want to unload whenever possible. So interesting stuff out there in VIX land, and of course interesting stuff on the old show today. But unfortunately, that's going to do it for the Around the Block segment, and that's also going to do it for this episode of the Option Block. But before we go, I want to thank the old all-star panel for joining me today. Starting off with you, Mr. Lobster. What is coming up in the land of the pit?
Land of the pits. We do have our July 21st, Saturday, July 21st, all day VIX from Apple to the VIX. So trading equity and index options with the help of VIX and VIX type equity indexes. It's a very useful seminar. Like we talk all this VIX junk all the time. It might be, it's probably nice to know actually how they trade. So, I think that it's a perfect opportunity to sign up. I think there's a couple spots left. Go to optionpit.com/events, and you can actually understand how these products work, because once you kind of understand volatility, it's a nice way to sell volatility without having to actually get involved with gamma and all this other sticky Greek stuff. Buy or sell, and you understand actually how it works and how the market prices this stuff. So Mark and Russell do a very good job with this.
May I suggest from a marketing perspective that you not entitle it Selling VIX Junk? And I don't know if that will catch wind with the retail clientele.
Between doing stuff and junk and everything else, I think that's really, I got to stick with what I know.
Yeah, you have some great technical terms there. I will give you that. You are a technical man, my friend. And Uncle
Yes.
Mike, aside from watching the collars in Apple, what else is coming up? Obviously, a lot of changes going on in KYO land. Anything you can apprise our listeners of at this point?
Not at this point, but there's pretty much everything's done a handshake deal as of now. So once everything gets inked on paper, we'll be telling the world. We're excited about what's going on.
Well, we are excited that you guys have set up this deal, and hopefully it will be a great deal for you guys and all of the clients over there at KYO. And, of course, all of us here on the All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.